at Atmos Coffee alongside Kevin Hinks. Joining us here in studios, TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Andy Swan is with us. It's time for our cash tag segment. We're going to talk some Foot Locker. This has always been an interesting one because I don't think we've often talked about this company in the most positive light. Right. Yet it keeps chugging along and kind of proving doubters wrong. So I'm interested to hear, kind of what the sentiment is around this company.
Yes, I believe this was a company where a year or 2 years ago, we sort of talked about this ongoing concern that Nike was going to pull a lot of its shoes from Foot Locker, and that's obviously its sort of biggest customer. But it actually has proved to be completely not correct, and they've done a very good job over the last year, sort of continuing with retail earnings momentum this week. They'll report tomorrow pre-market. But a fun fact about Foot Locker, actually, with about 3,000 stores globally, they have more locations than Kroger, Victoria's Secret, and Bath & Body Works combined, Gap, Target, Home Depot, and Kohl's. So just to show really their footprint, this is a pretty massive chain and one that we have definitely admittedly discounted. But analysts for this current quarter are expecting 44% profit growth year over year on revenue that's expected to come in relatively unchanged on a year over year basis. And over the last 2 years, they have beaten earnings estimates 75% of the time, but sales only about 38% of the time. So sort of mixed expectations there. But this week, actually, the board of directors declared a quarterly cash dividend of about 30 cents a share, which was up about 50%, to shareholders payable on October 29th for shareholders on record as of October 15th. So this to me signals a sign of a very healthy company. And management actually said this reflects their continued focus on offering meaningful returns to their shareholders while also funding significant investments in some of their growth opportunities. And growth is really what this company has done, again, proving us wrong. They continue to boost sort of their omni-channel experience, which is a word we keep talking about when we discuss retail this week. They also have sort of benefited from these ongoing positive trends in not only basketballs, but sort of this sneaker culture we've seen come to rise over the last few years, especially with people that are a little bit younger than Alex and myself. But on their last earnings call, management did highlight some concerns over the store closures in Europe and also Canada, and that is obviously expected to persist into this most recent quarter. So that is one headwind there. But another positive is actually their FLX membership program, which to me just seems like any other retail loyalty program, but it seems to be doing very well, especially regarding some of these sneakers and higher priced items. But ahead of this report, expectations are pretty strong. You have Macy's up in double-digit percentages today, and you have Kohl's up following their very, very strong earnings. Some of this sort of back-to-school sentiment I could see overflowing into Foot Locker, and that is what our first tweeter of the day discusses, who says, Macy's and Kohl's, yes, that's right, retail sales is strong. Analysts got it all wrong. Next earnings call for tomorrow morning is Foot Locker, expecting record breaker, long story intact. Now, I will say I know that sort of traders have short memories, but I do not, because I remember this week when we had Home Depot and Walmart see actually sort of a mixed bag following their earnings. Now, I would say Foot Locker probably echoes more similar sentiment to Macy's or Kohl's, but I do think a lot of this sort of movement depends actually on the broader market, less on sort of the actual numbers, because we did see blowout results from other retailers. The market just didn't react as positively. But our next tweet is actually for Andy Swan, who is a lover of this shoe. And I had to, of course, pull one of these tweets because we are talking shoes today. So our next tweeter today says, you walk into Champs Foot Locker now, and it's a whole section of Crocs, LOL. So, Andy, who you love Crocs, admittedly, I saw a lot of things about Crocs this morning and Foot Locker, which would echo all of the data you showed us about both Crocs and Foot Locker. So I'm curious what your data is showing with Foot Locker.
Well, I think I like what I just saw out of that last tweeter. It tells me that Foot Locker's trying to get away a little bit from its reliance on Nike. I think 75% of Foot Locker sales are Nike shoes, which is a big problem for this company long term, because Nike has a very, very competent direct-to-consumer strategy that is working really well, and they're really slowly cutting out the middleman. So Foot Locker needs to diversify what it's doing. Foot Locker is making great acquisitions, investing in resale and trying to stay local. And so I think, Foot Locker is an interesting case. We see LikeFolio right now has purchase intent mentions down very significantly versus last year. But you have to remember, last year they got a huge bump from stimulus spending that just isn't there right now. And so it's more about the long term for Foot Locker. I think they definitely have an uphill battle short term, especially if you're going to compare to 2020. But overall, I think this is a company that's investing in the future. The one thing I would say, again, that makes me very skeptical of Foot Locker long term is the consumer happiness level is very low, 54% positive, which is 14 points lower than Dick's Sporting Goods. So I think that's reflective of a poor digital experience that people are having with its omni-channel offerings. And so when you see a company trying to pivot to something new and not really resonating with the consumer, that gives me a real pause when we look longer term.
So just to be clear, Jenny Horn, fake news. We never said that Nike was going to cancel Foot Locker. We did have a discussion about how Nike's direct-to-consumer shopping was going to eventually erode Foot Locker's market share away, thus hurting Foot Locker. The theme was correct, but I don't think we ever thought that they would cancel, but it would just move away. And by the way, direct-to-consumer sales to Nike is starting to move away. Here's the good news for Foot Locker, Andy. And should we start to view this company as something more than just Nike? I mean, they bought a company called WSS. They bought a company called Atmos. They paid like $1.1 billion. So they're starting to branch out. They've got Crocs, which I don't really count as footwear, but that's another discussion for another time. So, but is this a company, Andy, a retailer that we need to look at past its Nike relationship in terms of profitability?
Yeah, we have to, because that's what the executives are doing. And I think that's the right move. I think this is a company that's making the right moves. It's just really unclear to me that those moves are going to pay off or that they're executing really well. Right. And from a consumer behavior standpoint, which is what LikeFolio focuses on, we don't see any indication that consumers are excited about what Foot Locker is doing right now. So there's a lot of unknowns out there. And I don't think that this earnings call is going to answer those long-term concerns in any meaningful way.
Andy, I think the other conversation, too, to provide context is we were negative in the sense that Foot Locker's legacy traditional business seemed to have trends working against it. I think that, as Kevin said, as you've said, I think as all of us has highlighted, that thesis is remaining intact. Mall traffic has moved away over the past decade. Going direct to the actual company producing the product is where trends are moving towards. So Kevin's point is correct. We're probably more likely now to go to Nike.com than you maybe would be to go to footlocker.com unless you didn't know what you wanted. That being said, we also gave the kind of asterisk or the caveat is Foot Locker's best chance is if they find some other kind of ancillary business, be that in the resale market or something else to provide reasons why Foot Locker is bringing value to the consumer. And it sounds like, be that through the rewards program they released, even if it is just like everything else, that is still something, or some of these resale investments that they've made and some of the other acquisitions that they've made. It sounds like either they were listening to us in our conversations or they had people with the same thoughts and saw the same risk, which I'm guessing it's the latter. So, Andy, when you look at this company, do we have to, I guess, and this is similar to what both Jenny and Kevin have already said, do we have to start considering, what is the growth potential of these other ancillary businesses? And that's really the investment decision. If there isn't traction in those, the same long goodbye kind of story is still there.
Yeah, I absolutely agree with that analysis. I think that, we're kind of having a conversation that I think of a Foot Locker executive were on this right now, they would probably agree with a lot of the things we're saying in terms of consumer trends, in terms of the strategy that Foot Locker has to embrace going forward, in terms of its reliance on Nike. I don't think any of these things are really that controversial. It really comes down to how well they execute and how well consumers respond to what they do. And so far, LikeFolio data says, we can all say, looks like they're headed the right direction strategically. But from an execution standpoint, so far, LikeFolio data, pretty clear that this is not resonating with consumers yet. Consumers are still not happy with their experience, and purchase intent really not a blip on the radar. So we'll have to stay tuned. I'm sure this is a long-term plan for them, but the early indications, I don't see any reason to abandon the thesis at this point.
Okay, so I have to defend myself to Kevin Hinks because I didn't say that Nike was going to cease to be a customer for Foot Locker, but you go on their website and it sort of almost looks like it's a Nike website. They've sort of advertised themselves to be Nike's top seller, and I think that is the concern. The more Nike pulls away, that's a huge source of their revenue. That's what I meant. But Andy, my question to you is, you think back to school. I always went shoe shopping. That was one of the things on my list of things to do. So with this sort of seasonality we're seeing with Foot Locker as we go into this back-to-school season, I'm curious your thoughts on this current earnings quarter, because of course this is reflective over the last 3 months. I understand you seemingly seem bearish on the long term, but for the short term, for tomorrow, what are your thoughts?
Yeah, I would lean bearish because I think that's the way my thesis runs on the company, and I don't see any indication out of our consumer data that there's any reason to abandon that at this point. So that's almost the totality of the reasoning. On the other side, if you want to argue against yourself, which I always encourage traders, investors to do, I do think that back to school is beneficial to Foot Locker because it's one of those things, just like Dick's Sporting Goods, you kind of have to go in there. If you haven't bought new shoes for your kids back to school, you kind of have to go in there to really know what size they want and what they like. And it's part of this big experience of going back to school. So you're not necessarily going to trust just going to Nike.com like you might the rest of the year. So I think that's one thing Foot Locker has going for it, seasonally at the moment.
Andy, where this fits in the overall retail sector, we've heard from tons of earnings, and it seems like kind of this discount retail has surprised. When you look ahead and compare that to what you're seeing in your data, is there concerns going forward in general as the pandemic seems to kind of be resurging here, or is that still just chatter that we see kind of in the mainstream news headlines, or is that actually showing up in kind of consumer sentiment data that you're tracking?
Yeah, it's not showing up nearly as much as you would expect given the headlines. I think it was Macy's today that came out and said that the real consumer divide is between the ultra-urban consumer and the suburban and rural consumer. Two very different attitudes, two very different reactions to coronavirus, and a lot of that very understandable given how population density plays into this. So I think there's a whole lot to work through, but in terms of what we're seeing, where Foot Lockers would be, really not the concern that you would think it would be, coronavirus that is, in terms of how heavy the headline has been over the last 2 or 3 months. We don't see the consumer nearly as scared as you would expect given the level of headline noise.
Good stuff. Andy Swan, the co-founder of LikeFolio.com. Thanks as always for taking time out of your busy day and joining us here on Fast Market. Jenny, Foot Lockers, I love the stories that not necessarily prove doubters wrong, but make doubters doubt their doubt, if that